the side hustle. And in this day and age, it's sometimes not enough just to have one job to make it through. So we're going to talk about having multiple streams of income and how you can ensure that you can get ahead in this life. So Alynn, I'm going to let you take it away, and let's talk about getting extra income and how does that affect everything like tax-wise and all the fun stuff that comes with that.
Okay, great. So we're just coming off of income tax season, and I definitely have seen an uptick in the number of people that have a second job or a side hustle where perhaps they're doing like a multi-level marketing and they're selling. I had a couple people that sold like vitamin supplements, a few people that are still doing like Tupperware, Pampered Chef, those types of those parties. Yeah. And so one thing I want you to be mindful of is if you have a regular, 9 to 5 kind of job where you have T4 income, hopefully your employer is taking off enough tax. For the most part, this is just generalized, but most employers are taking off enough tax to cover off your tax liability. However, if you have a secondary source of income, and let's say somebody's paying you commission, so some of these, vitamin companies as an example, you'll get something called a T4A. So it'll say, self-employed commissions or business income, and that income gets included, it gets tacked on to your T4, your regular T4 income. So the key is if it's a lot and you're not prepared for it, then you're likely going to be in a position where now you could have potentially gone from a position where you're used to getting a refund or kind of just breaking even to now you're tacking on some additional income. And with us being in a progressive tax system in Canada, now you have to pay tax. So when you are self-employed, so if you have that commissioned income, then the government will technically consider you self-employed. You in theory have until June 15th to file your tax return, and so does your spouse. However, a word of caution, and I think that there's not enough information about this, and this is one of those things where people don't have enough clarity on it, so hence why we're doing this video. If your balance owing, or if you have a balance owing, it's due April 30th. So if I'm a T4 employee and I sell vitamins on the side and I wait till June 15th, but I owe, say, $1,000, the government expects me to pay my tax liability on April 30th.
Wow. And
if I don't, do you know what the penalty is?
You told me once, but I can't remember what it is. It's fairly...
Because you keep up to date on your taxes, so it's a non-issue, Glenn, because you have a good tax preparer to make sure that you don't have to pay your taxes, or you pay your taxes on time. It used to be a 5% penalty they'd assess you. It's a 7% penalty the first day it's late, and then it's 1% per month after that.
Wow.
So I know that there are just... Again, there's so many people that are doing these side hustle jobs that I've had a few people that were not pleasantly surprised. So the opposite, they were shocked, and they were upset that they were owing. It's like, well, and we do taxes for clients. Like, well, let me know when you have an income, a new income, so that we can plan effectively. When you do have a business, let's say, one of these vitamin businesses, or again, one of these multi-level marketing businesses, you can deduct some expenses. So depending on the amount of usage, you're using your cell phone and your internet, there's some thresholds.
Right.
Deducting a home office. I think the key is be reasonable about the expenses that you're deducting.
Can you claim like car and gas and car insurance?
Yeah, if you were, like, let's say you're delivering, items. I have the one lady that was doing Tupperware, so right. She would do like a Tupperware party. So she would go to somebody's house, do a Tupperware party, and then when the orders came in, she would bring the orders to the person that had the party, or in some cases, she was driving items. So yeah, in that lady's case, but you got to track your mileage, so tracking, and then keeping track of how much she paid for gas, car insurance. Those are legitimate deductible expenses. Right. I've seen situations where, somebody's made a couple $100 in their business and then they're trying to deduct $10,000 in expenses. I'm like, well, time out. You're a really good candidate for the CRA to audit you, because if you then have a loss, then that's helping your other, say, T4 income. And that is when you're in a situation where the government's going to owe you money. You got to be careful. That can be a little bit of a slippery slope. So I do have a few people this year that we had to have conversations that at the end of the day, ultimately we file your taxes, but ultimately you're the one that has to answer to the government.
Yes.
I've told a few people, I think you're pushing the envelope a little too much here. But I think the key is just being mindful if you have a second income, or you just, you pick up something very part-time, or even I had a few people, because we had a couple of elections this year. And I know people that have done them in the past. They said, okay, if you're going to do some work for Elections Canada, that's extra income. They don't deduct any tax.
Oh, really?
Right. Yeah.
I wasn't aware of that.
Yeah, and I had somebody else that had proctored some exams. Again, they get the T4A slip, and they went, oh, I never thought of this, right? You just go for,
right.
A couple weekends, and, it's a few hours. But if you're just having enough tax come off, and then you're tacking on another, $1,000 of income, and, let's say you're working somewhere and your income's $70,000, you're in a 29.65% tax bracket, you throw an extra $1,000 of income on that, then you're still, and then nobody's taken off tax. That's a $300 tax bill potentially just for that $1,000. So the whole point of us doing this podcast is just so that you have that awareness. So the side hustle is one thing. The other thing is when I find that young people, so I've had a few clients where they have teenage kids where they've had 3 or 4 jobs.
So that's a good question. Like, when should you start declaring income tax? At what age?
Yeah. So, I think as soon as a child has income and they have a T4, file a tax return. Start to build up some TFSA or RSP contribution room. And depending on their age, if they're under the age of 18 and they've had EI or CPP come off, they get all of that money back. Any federal tax.
Really?
Yeah, any federal tax. So in the year 2025, the basic limit for every Canadian, so I can make $16,129. You can too, every Canadian, before you start to pay tax.
Okay.
So if you have a young person that's maybe worked a part-time job at McDonald's and they made, say, $10,000 and McDonald's took tax off, that kid's going to get all of that money back in box 22 of their T4 slip that came off for federal tax, because they're not going to have to pay tax.
I did not know that.
Yeah. So I have a number of clients, they ask me, my child just started their first job, should we do a tax return? Absolutely. And we want them to get in good habits so that they know each year they have to do a tax return.
Right.
We have a lot of people that we caught them up on. We had a few this year that were 8 and 10 years of back tax returns that people hadn't done. Yeah, it's a lot. So get your kids in good habits now. And they have that job, great. Explain to them, yes, you're paying federal tax now. At some point, you're not going to get all that back. At some point, the government's going to keep a good chunk of that. That's how our tax system works. So I think the key is having a discussion with them and having them learn and get to understand how taxes work. And the other thing is, I've had a few situations where young people have multiple jobs and they actually end up having to pay tax because, you have job A, B, C, D, and none of them are taking off any tax. But once that kid makes over that $16,000, guess what? Now the government wants some money.
Cut, yes.
Or if they're in college or university and they get any scholarships or bursaries, that's taxable income.
Wait, scholarships and bursaries are taxable?
Yes, sir.
Another thing I did not know.
Or let's say mom and dad saved in an RESP for the kids. And what happens is when the money comes out, the money that's grown in there, so the contributions the government's given, and, mom and dad throw contributions in there and there's growth that they make, there's something called an educational assistance payment. So the kids get taxed on that. So I've had a few situations where, young people in university are owing, $300 to $500.
Wow.
Because I had one a few years ago. It sticks out because mom and dad, they've been my clients for a long time. They were pretty angry. And I said, hey, the positive is that your daughter got a lot of money from the university and she had a couple really good paying part-time jobs. The negative is that the government wants a cut of that. That's how it works. So the reason we do podcasts is, and I always say you don't know what you don't know, so that you can plan effectively for your family, and that, because there's nothing you can do when, a 20-year-old that's going to university brings you their tax return information in March or April. They can't put money into an RSP. You can't go back and ask an employer to take money back. So the key is knowing this information ahead of time and planning effectively.
Gosh, it's like the tax man is a big white elephant in the room.
That's not white elephant. I talk about it all day long. It's just knowing and being mindful. We all have to pay tax. There's no way around it. But it's the more informed you can be and the more you can plan, the better. Because I've seen situations where, somebody comes to see me, we do their taxes in March or April, they owe a chunk of money, and by the time we're doing their taxes, say at the end of April, we're already 4 months into the next income tax year. So then you're trying to pay for, say, 2024, and now you're in 2025 and going, oh my God, now I'm already a third of the way through the year.
You're behind
trying to
the
pay.
eight ball.
Yeah, so it can become this vicious, ugly circle, right? So the more you can just plan in advance, and I've had people tell me, hey, if you're going to get a second job, great, let me know. Let me run a quick calculator. It takes me 30 seconds. This is what I do all day, every day.
Right.
To make it easy to say, okay, take off X amount of dollars more, or just be prepared for it. I always say it's pay now or pay later. So have your employer take an extra 10 or 20 bucks off, and you don't have to worry, or just tuck aside that extra 10 or 20 bucks a week into your TFSA or somewhere else, knowing that you're going to have a tax bill. Personally, I don't like to pay the CRA any sooner than I have to. That's how I roll, but not everybody's like that. Same with old age security and Canada pension. This year was actually really weird, where I had people that normally had money coming off for CPP and OAS, and they had nothing come off. So I had a few uncomfortable conversations with people, letting them know that, hey, you actually owe money this year where they weren't expecting it. So if you're watching this, pull out your T4 slip for OAS and for Canada pension, and look at box 22 and see how much you have coming off for tax, because there were a few people where it really threw us for a loop. Again, it's after the fact. We didn't realize. I mean, I know that they're receiving the income, but not realizing that the tax wasn't coming off. So just a few tips. We kind of covered the whole range of, young people just starting off with jobs to seniors that are collecting CPP and OAS, but just really being mindful of how much tax you're paying, and doing that planning piece is so important.
So I know somebody who works 3 jobs right now. They're trying to save up to be able to afford to move to Toronto, the bigger city. Mm-hmm. What kind of tips or advice would you have for them, aside maybe from what you've already shared?
Add up what all of your income is. Yeah. Right? So, I mean, we're filming at the end of May. Now's a really good time to say, okay, what have you made so far this year? Are you going to keep those 3 jobs? What does that look like towards the end of the year? And is there enough tax coming off collectively from all 3 income sources? Or is this person going to be in a pickle next year? Because now's a good time to identify, okay, no, there's not enough tax coming off. Go to one of the employers and say, hey, can you take off an extra X amount of dollars so that you don't have an ugly tax bill, or tuck aside money into an investment vehicle to help pay the tax bill next year.
Great suggestion. Mm-hmm. Yeah. I wish I would have known all of this stuff when I was in my early 20s. I mean, I moved out when I was 22, and I was working 3 jobs at the time.
Taxes have gone up a little bit since you were since you were in your 20s, but still, and things cost a lot more than they did back then too, right?
But I think it comes back to like side hustling and like hustling. It just seems sometimes it's so hard to get ahead, even working 2 or 3 jobs.
Right.
When you got all these taxing. So I guess the key is just to plan appropriately when you do have more multiple streams of income.
And I've had people actually say to me, well, it doesn't make sense to do this side hustle, does it? No, it doesn't, because you're now having to pay more tax because you're adding it on as income. And then when you break it down to what you're actually taking home and the amount of hours you're spending,
it's not worth it.
Everyone's situation is different. But when people want honesty, just come tell me, like, hey, if you love it, that's what you want to spend your time doing. But if you're only making $5 to $10 an hour to do this side hustle, maybe it's not worth the hassle, the headache,
and the hard work.
Yeah.
Wow. All right, so I guess that's our episode on side hustling and being prepared for it. And do you want to add anything else before we close her down?
No, but if you have questions, put them in the comments. I'd love to hear what kind of side hustles people have. I just had somebody ask me if I were to be an Uber Eats driver, do I have to claim my income? Absolutely, you have to claim your income, right? So that's one of those things where I was in Toronto a few weeks ago. I could not believe the number of the drivers on bikes delivering food.
Yeah.
And the one day, it was like 9:30 at night on a Wednesday. Who on earth is getting this food delivered? First of all, I'm in bed at 9:30 on a Wednesday night. But downtown Toronto is hopping with all these Uber Eats and DoorDash people on bikes delivering food. Like within a 4 or 5 block walk, I saw dozens of people on bikes delivering food. It was just unbelievable.
Wow.
So yes, you do have to declare that as income. Also, like, just make some food at home. That's really expensive.
So
yeah.
I guess I want to ask this question. It just came to mind about getting paid cash to do jobs. There's certain training that you take where you have to kind of let the government know about things like that.
Yeah, if you're in a job where, if you're a waitress, as an example, your employer is giving you a T4,
right?
But you are supposed to be declaring your tips that you're making, that they pay you, as cash. If you're, doing nails, as an example, and you're getting tips that are cash, those are all items that you need to pay tax on. If you play in a band and somebody's, a bar is paying you cash, you're supposed to declare that as income.
What can be the ramifications if you don't?
Well, the government can, they can fine you. They can arbitrarily assess your income. They can ask to see bank records. They could, the government has a lot of power. So it's one of those things where, I get people don't want to pay tax, but if you circumvent the system, that can be really problematic and really bite you. And then you're flagged forever with the government. Is it worth it? And the government will pick different industries. I remember a couple years ago, they targeted the Niagara area, and they were going after, restaurants and spas, and, they kind of pick a different theme every year.
Right.
I find where one year they're perhaps auditing, medical expenses, might be donations, they know where you work. If you work at, work at a large chain restaurant, the government is going to know if you're a server or what it is that you do. Make sure that you're declaring some tips, because to me, I don't think it's worth the headache and aggravation of the fees
and being flagged
and
for the rest of your life.
And they can find out your information. So yeah, it's one of those things where you should be declaring your income.
All right, so we'll leave it on that note. Always declare your income, because the government has a lot of power and can come back to bite you if you don't. So the tax man always gets his portion. And we'll leave it at that. If you have any side hustles, please leave them down in the comments. Or if you have any questions, comments, or concerns, we'd love to hear them, and we'll do our best to reply to everything and every comment that we get. All right, so have a great day, and we'll see you on the next episode.